Good morning, good morning. Happy Friday. Let me know if you guys can hear me. Let's see if this headset's working. Good. Thanks, Cisco. Good, good, good. All good. Well, here we are again. Another rotation up. Now, let's see. A couple of days ago, we had that sell off, right? And we dipped underneath 73.91. And the concept of rotation, especially in markets that have limited supply, it's really a concept that you guys really, really, really need to be aware of. Okay. It's what gets a lot of traders in trouble, especially on the positions short side. So what happens is when a market has limited supply, like the ES. Now, if you don't understand why the market has limited supply, go back and check. There's a video I did on why markets always hit new highs after they sell off. It's it's an important video, and nobody, and not to sound egotistical, but nobody's ever done such a video. I've never seen anybody talk about market structure, company structure, anything like that. The way a company is structured, the way a market is structured, if it's comprised of a certain amount of companies, that's going to affect how it trades. Now, when I say limited supply, I mean the ES is made up of what did they say? Nvidia and Apple are what 30% of the S&P. Okay, those companies trade less than 10% of the stock that they have issued or in the float. And what happens is, so they have 15 billion shares in the float like Apple, maybe 40, 50 million trade a day. So 80% or 60% or a lot of these companies, the large percentage of the stock is owned and locked up by institutional investors, not traders, investors. Very big difference. Huge difference. Investors who have trillions of dollars and hold those positions for decades. So what happens is when you have a liquidation like COVID, or when you had, here's COVID, right? There's COVID. There's when Mr. Trump had his little tariff hissy fit. The market always rebounds and hits new highs. Here's the war liquidation. And all these liquidations do is they take out overhanging supply, flush it out, take out overhanging supply, flush it out, and then boom, boom, right back to new highs. Happens every single time. I learned this by structuring and trading penny stocks, okay? Where we would limit the supply if we wanted the price to go up, right? You always hear buyers are defending price. That is the biggest load of crap you'll ever hear. Buyers don't defend price. Defending price by buying stock back is the best way to become homeless. How you defend price is you stop selling. And in a market where the supply is limited and it's held for decades, it's very easy to stop selling because all you're doing is you're flushing out short-term traders. Right? These are all swing longs. They get flushed. You just turn off the tap. Exactly. Right? And then as soon as you turn, two things happen. One thing happens is people short down here. Now the smart money covers. Okay, sorry. So when the market goes down here, the first people to buy are the smart money shorts. Then wholesale builds a position on top of them. Then we come in, right? That's retail and swing traders. Then what happens is the people who shorted, the dumb money shorts who shorted in this area, they go to cover. And when they go to cover, the supply's all gone and everybody just yanks the price up, right? And this, you see this happen. This is a weekly. You'll see this happen on daily. You'll see this happen on a 30-second time frame. The business, here's the news flash that nobody tells you. The business is always the same. No matter what time frame, the business is the same. Players are a little different, but the business never ever changes. So the time frame of the chart just tells you how the business is going during that time frame. That's it, right? No big mystery, right? So if you learn how to trade on the 1-minute charts that I teach you on how to do these trades in a limited supply market, we call it the look below and fail. Basically, it means the sell orders are done. When the market proves the sell orders are down, we go buy a little bit. When the market moves up looking for the seller, guess what? We're the seller. Simple, right? Simple. Simple and easy to do. Not easy to do, but easy to understand. If it's easy to understand, we have a much better chance of executing. So once again, we had that liquidation over the last couple of days. The last 3 days, boom, straight back up. And we're looking for that, that upper 75.41. But the first thing we do is we did a look below and fail of 73.91. And I told people it's going to rotate back up. And the target is 75.11. And our high tonight is 74.94 3/4. 96 is the level. And the next level is 75.11. Okay. So the inventory tonight is 100% long, which means pretty much every single trade is above yesterday's close. So naturally, short-term business is to try and correct that back down. Like if we were to open up above yesterday's high, we're opening on a gap. Let's see what happens when London opens here in 5 minutes. Let's go take a look. Now, my balance levels, we got a poor high in the overnight, which means we've got sellers competing at 95. That's good. All right, and we came right back down. Do you guys see this? This is the cool thing about market profile if you know what to look for. You see how there's a poor high here. That means sellers are competing at that level twice. So what you do is you short and you put your stop here, right? So the trade is short, stop. And then you know that there's going to be buying at yesterday's high. That's why the K period there, it front ran. People who aren't used to market profile, right? This cape, what this is, we just give each half-hour bar a letter. That's what I'm thinking. I'm looking for to see in 5 minutes. London usually likes to go lower, and I'll be looking for that low at 83. If we can get back inside yesterday's range. So if you're short, say you shorted 93, right, and your stop's 95, put some bids down here. Like say you shorted 10 contracts here. I would go and try and cover, I'd cover 5 here before the previous day's high just to make some cash, right? Then I'd put a contract, a buy order here, like you got 5 left. So you're minus 10, then you go plus 5, minus 1, minus 1, minus 1, minus 1. Now, if these buy orders do not get filled, these are called bids. If those bids do not get filled, then you can just buy back your position here and book profits. Now, Amdeep, that is a very good question. Is it true that all gaps must get filled? No, it is not true. That is another of one of the largest misconceptions that comes from probably 40 years ago that all gaps fill. But the markets have changed in the last 20 years in that we have trillion-dollar investors who hold positions for decades. We have gaps going back to COVID that have not filled. So all gaps will fill if the order flow supports it, right? We have gaps going back. Where is it here? Let me show you. Look at these. We have three gaps here. We have a gap going back to April that has not filled. So will it fill? It might, right? That big gap here down in the 6,800s, it might, but it might take 2 years to get back down there. So if you automatically short a gap thinking it's going to fill, and people have, trust me, people are doing, they shorted this, right? Then they shorted, there's a gap here. Where's the other one? It's here, right? You know, there's a lot of really stupid sayings in retail trading. A lot of really, really dumb sayings because the people who make up these sayings, they don't understand how the business works, right? So they come up with these dumb sayings and they think they're all really smart, like all gaps fill, right? Do you know how many people I've known since COVID who have blown up, I mean, lost hundreds of thousands, if not millions of dollars, shorting gaps that never got filled? It is a travesty. The amount of misinformation in the trading world put out by absolute morons who have never traded size is astounding. Buyers are fighting sellers. Buyers are defending price. When markets go up, buyers are in control. All of this stuff is the biggest load of crap. And you ask them to explain it, right? Most sayings in tradings are a trap. If I was a tinfoil hat guy, conspiracy theorist, I would say, oh, you know, it's a trap to get you to lose money. I just think it's a lot of stupidity, and people really want to sound smart. Me, I don't care about sounding smart. I just want to help you make money, right? Because I grew up in this business, you know. I've been doing this since 1993. And I was never a retail guy. I was always an institutional guy. And I always traded for the people who always make money. Why do they always make money? Because they have the lowest cost basis. So if you buy, check this out, okay? This is my world is this, right? For $5,000, you buy 1,000,000 shares. So your cost basis is a penny. So if you own the stock at 1 penny and we open it for trade at 30 cents, take it up to 80 and then sell it back down to a quarter, my people have paid a penny for it. So they can sell it all the way down to 1 penny before and still make money. That's cost basis, right? So cost basis is the most important thing in trading. That's why we do these balance. Now, I haven't done a balance zone for this morning yet. I'm using yesterday's, and I'm using that 75.23 is 8 times cost basis. One thing I have not done is I haven't gone and put VWAP on here. So let me go do that. I'll probably redo the balance zones later. Gotta admit, I'm being a little lazy this morning. London is now opening. Let's see if London can take out that K low. Where's my chart? So remember I said if you're short the 93s, the 92s, you should have covered at least, if you were short 10 contracts up here, You should cover at least half here, right? And if you had the other 5 contracts, I'd put bids in here. Bid, 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 bid. And as the market goes down, let them hit your bids. They're probably going to front run VWAP. Okay. And I'll probably redo. I think, this would have been a good balance zone here, right? Because you can see the sellers and the buyers on both sides of 80 to 84. Best one is sellers didn't manage to sell it lower. Yeah, that's hilarious. That's yours, Moran? Yeah. There. So you dropped, if you had sold 10 up here, you'd be covered down here. It's a good place to cover. Now, that J low where J and E are, if we crack that stop, we're going to come down to the overnight pocket 81. See how it's bouncing right there? So we use this market profile is just basically a fancy half-hour candle chart, which just tells you a little bit more information than a candle. It tells you market structure. Market structure is important because market structure tells you where the inventory is, where the stops are, all that good stuff, right? What do I mean by front-running VWAP? Well, you see here? You see this? Before, when we came to VWAP, it didn't actually trade. Buyers came in and front run. It means jump the line. If you know that someone's buying VWAP, you'll jump in front of them. You'll jump in front of them for that move up. Now we're breaking VWAP. That's good. It's a good liquidation. It's a really nice correction to overnight inventory. And now the overnight POC is right there. So front running comes from this. User, say you and I are sitting next to each other on a trade desk. This is how it happened. You and I are sitting next to each other, and your client calls you and says, "Hey, user, I want you to sell 1,000,000 shares of this stock." Okay? I know that order is going to knock the market down because you're coming in with size. Got it? So if I know that you're going to sell 1,000,000 shares, I'll go sell before you start selling. I'll short it. Say the stock's $5, I'll short 10,000 shares at 5. You'll knock the stock down to 4. I'll cover at 4 and make a quick 10 grand. That's what that front running is. That's how it is. In the old days, when brokers or traders would get big orders, they would grab their phone and go under their desk so nobody could hear the client. Otherwise, everybody would front run you. Nice. 82 long? Yeah. Now let's see what the seller is. You should be okay up to around 86, right? If you're jumping in on a VWAP run, Cisco's long 82. Right, this is just a nice little inventory correction. What's an inventory correction, right? An inventory correction is, right, we have the product from yesterday, right? And we're selling it above VWAP all night. See? Making good sales, making good sale. Here we had a little sale, put it on sale. And what happens? That brings in buyers, right? Then we put it on sale again. Now let's see if it brings in buyers again. Remember, my friends, this is just a sales chart. This is a sales chart. Any chart you look at, it's just a sales chart. It's just telling you how sales are going, right? And do we have to put it on sale? Are they buying it here? Or do we have to put it on sale? So he's long 82. If you're long 82, I'd be looking for the previous day high. I'd have offers here for sure. 82 to 86, 4 points. Beautiful trade, right? Beautiful, beautiful trade. You know, 4 points on one E-mini is $200. On five E-minis, that's $1,000 trade he took, and he's been in that trade for 3 minutes. Not bad making $1,000 in 3 minutes. His risk wasn't very big either. His risk was the bottom of this candle here, right? So he bought 82, put your stop here, and then sell into this. Take the 4 points, right? Now, if he left a runner, I don't know if I'd leave a runner in this situation, but he's very patient. If you left a runner, I'd be a seller at 88. It has to get over yesterday's high. If the market can't break 86 and 3/4, scratch that one contract. Every trade we take is a business decision. It's a transaction. There has to be a logical business reason to take the trade. So if things go wrong, we know to get out of the trade. This is why we don't do stupid things like adding to bad trades. Because once the business reason for the trade does not exist, we take our money and run, right? Once the business reason goes away, so do we. Every trade is based on solid business principles. And let me tell you, there's only two principles in this business: too much supply or not enough supply. If there's too much supply, we go short because we see sellers competing and lowering price. Not enough supply, we go long because we know that the market's going to rotate up to look for a seller. And guess what? We're the seller. Simple. Now all you got to do is practice these trades 1,000 times and you'll be fine. You're always confused as to, yeah, well, VWAP is not an easy trade, Moran. Sometimes when it's nice and flat, you can trade it, right? When it starts to curl or spike up, leave it alone. Here it's relatively fat. And Cisco's a fast trader, so he can take that trade, get in, get out, get paid, right? If you're just learning how to trade or if you're just getting consistent, just trade a flat level. The reason is VWAP is not a static reference. It moves. These levels are static references, right? Where the sellers are is a static reference. It doesn't move. So say he was still long and it broke 87. He knows there's going to be a seller here at 89. Really simple, right? Static references it's like shooting a gun. You're holding still. But if you're riding a horse and you're trying to hit a target and the horse is moving, like in those westerns, it's a lot harder to hit the target. Make sense? Right? VWAP is not a static reference. It moves and it changes. Right? So we have quite a bit of inventory trapped long above us. We didn't move the point of control up. But that's okay. Not a bad distribution. Not a bad distribution. Now let's see what the next order of business is. Oh, thanks, Flo. Thanks for joining us. My thing about trading psychology, right, is if you understand what's actually going on in a market, you don't need psychology as much. The reason people need trading psychology, and trading psychology just doesn't work. It does work, but it takes years. How about you actually figure out what you're doing, and then you don't need a psychologist, right? Trading psychology did not exist until the last 10 years. Do you know where trading psychology came about? Does anybody know how this trading psychology came about? Let me tell you. I'm not beating up on it. I have a good friend who's a trading psychologist. Trading psychology came about, say we had a hedge fund, right? So we have a hedge fund and I'm Bobby Axelrod, right? And my traders aren't doing well. Like, one made 7 million last year. This year he's only made 3, right? So we have a trading psychologist, which is like a performance coach to get them back to making more money. They've taken that and they've, of course, bastardized it. And now retail traders need trading psychology. Let me tell you something. There is no amount of trading psychology that is going to help you if you don't know what the hell you're doing, right? If I'm a cardiac surgeon and I keep killing patients because I've never taken human anatomy, there is no amount of psychology that's going to make me a better surgeon. If I'm a cook and I keep burning the food, there is no amount of psychology that's going to make me a better cook. I need to learn how to cook. Psychology is just another way to get money off you guys because, oh, let's pay for these psychological things. Tell me about your childhood. Oh, I have a gambling. No, you just don't know what the hell you're doing. That's why you keep making the same mistake over and over and over again because you have no clue what the hell you're doing. Now, if you do know what you're doing and you're making the same mistake over and over again, okay, how about we use some trading psychology before you blow up your account and lose your house? That's another thing. You know, I had this big argument with one of my friends who's a trading psychologist and a good one too. She works for hedge funds. I said, how about we teach people trading psychology before they lose their money? And she was like, no. I was shocked. She's like, no, they need to lose their money and then come to me. And I'm like, you know, that business model doesn't really make any sense because if I work at a brokerage firm and I bankrupt the brokerage firm, that business model doesn't really work in the real world. You don't run a business and bankrupt it and then go to a psychologist and then do better. That's not how it works in the world. You got to have knowledge, and that's what we teach you. So we teach you things like only take trades at certain places, and if you're not taking trades at those places, it's because you don't understand, right? Then we use psychology to find out whether or not are you tuned in. We use test trades to see are you seeing things or is your mind playing tricks with you. We use psychology in a real world helpful way. And we want to use trading psychology before you lose all your money and before things get completely out of control, right? Exactly, Cisco, right? You know, we need to teach you how the business works. There's no point looking at trading psychology. If you're blowing up accounts, you don't need trading psychology. You need to know you need to figure out what the hell you're doing. I'm a mechanic and I'm putting engines together and oh, there's all these parts left over. I'm going to go to a psychologist. No, you need to go to school and learn how to put an engine. You need to know how an internal combustion engine works and where all the parts go, right? Unfortunately, marketing is so good now that we've gotten these poor people buy this, buy that, buy this software, this psychologist, this, that, and we just flood people with marketing, you know? And that's why I'm kind of unpopular in the trading community. A lot of these traders in the trading community don't like me because I tell the truth, right? And they're running trading rooms that are $300-400 a month with add-ons, this and that, and pro package and this and that. And I'm saying you don't need all that. All you need is a 1 minute candle chart and the ability to draw a straight line and pay attention. And that just rips everybody, right? They hate that because I'm coming along saying the truth is hard to sell. It's a lot easier to steal money from someone than to convince them that they're being robbed. It's so much easier just to steal your money than to tell you that you're being taken advantage of, right? It's actually impossible. We have the cheapest room out there And we do that to try and give people an advantage. So you pay 20 bucks a month to be in our room. You get this free AA, get all this stuff at Trading Syndicate. And we're trying to, you know, make it accessible. We want to take this knowledge that I have of 34 years, and give it to people so they can actually, look after their family, right? It's really all we want to do. A trading journal, you know what the best trading journal is? A notebook and a pen. So what you do is you just describe, you write down the trades, and if you're doing like 100 trades a day, then you're over trading, right? Scalping, I mean, I scalp, I do 3 to 5, sometimes 7 trades a day, right? You don't need to do 100 trades. All you're doing, if you're doing 100 trades, is you're just keeping the brokerage firms and commissions, right? All you're doing is you're just wasting your money, right? Because even a scalp is a business decision. You need to know why you're taking a scalp. Most people are out there just scalping because they get sucked in by candles. Now, here's a perfect example of trading psychology practical, okay? Right here, there's no trade. Small candles like this and it's choppy, just leave it alone. Because people will go long, they'll go short, they'll go long, they'll go short. And by the time the real trade comes, they're so tilted that they don't have any money left and they don't have any patience left. Right? I see it over and over and over again. Right? You don't need expensive trading journals. All you need is a notebook. Go to the go to the dollar store, buy a notebook for 99 cents. You don't need trading. You don't need some fancy trading journal, right? Remember, everything is marketing, right? And remember too that trading education is not, there's no regulation. So any idiot can say they're going to teach you how to trade, take $300 to $500 a month off of you, and not teach you anything, right? So beware of these things. There are a lot of scams out there, right? No, Howard, you're just joining us? You're a little bit late, amigo. I haven't done any yet. I'm using the ones from yesterday. If I if I do some, I'll put them out a little later. Okay? Number one, it's Friday. I was being lazy, and number two, the levels I saw were a little tight. So I wanted the market to trade a little bit before. Like I could use this, or I could have used this, but you know, you just keep doing what you're doing, Howard. 2 to 3 points here and there. You're still in trading university. Okay? It was really good work that you did this week. So I want you to keep that up. Okay? Keep up the good work. My job for today is to clean up my desk. You can hear me thumping around here. That's my job. My job today, my primary goal today is to clean up my desk. My desk looks like something exploded on it. Oh. Here we go. So Cisco, if you're still long and it holds the previous day high, your target's going to be this stop up here at 89.5. Good stuff, Moran. You're picking up on those subtle signs. Really good. Really good. Good, good, good. Over halfway through the month now. You know, most of the inventory is around 74.23, 74.44. We are in pure distribution right now. Yeah, 92 looks like a good, you know, we can get up here. We can move that overnight POC. See, we already moved it, right? We moved it from 81 up to 83 and a half distribution. We'd like to move it up here. The problem with big time shorting is if we accept over 96 and a quarter, we'll probably go tickle that 75.11. And this is the only inventory left. That's the only inventory above 7,500 is that one day. And most of that has been flushed out, right? So there's not going to be a lot of people selling into this if we get up over 75.11. So watch out for that. You know, be careful if this thing gets over 75.11 and accepts, because there's only going to be a couple of stops. There's going to be a stop here. That's pretty much it, right? There's, you know, 75.11 and a quarter. And then here we have the upper stops from that record day. 75.24, 26 and 3/4, and then these upper stops. So be careful, right? If you're position shorting, if we accept over 75.11, things could get dicey. Thanks, Cisco. Mahalo. And we're creeping up on that 88, 89 level. Oh. Shorting markets, position shorting a market near all-time highs is, that's really a fool's game. It's okay to take, like, you know, if you saw a seller here, you know, there were sellers here, and you could have shorted the 93s using the 95s as a stop. But if you didn't cover, you know, thanks, Moran. You know, you got to, you know, take what I call hit and run shorts. Get in, get out, you know. Don't, and as soon as your seller goes away, right? See, we had a seller here at 86. As soon as the seller lifts, right? The seller, that's why you always watch the offer. The seller is the most important thing. Now look. See how the offer is lifting above 89 and a quarter? See? Look. That means the software has seen buyers. So it will try and get those buyers to pay more. Right? And if we run out of buyers, they will lower the price to capture the buying. That's something also that people don't understand. How many of you guys have heard the term capture the buying? It's not a term that is used in retail trading at all. So if I'm a seller of size, if I'm a wholesaler, I've got to compete against a whole bunch of other people, right? So if I'm selling and Cisco's selling and Moran's selling and Marcus is selling at 89, I'm going to have to lower the price to get the buyers because if I refuse to sell under 89, right? They're going to capture these sellers and turn their inventory into cash. They own their inventory at 84, so we can sell it all the way down. Now, we don't hammer it because we don't want to scare away the sellers. I mean, the buyers, right? The sellers will control the price because if the sellers see buying, they will raise price. If the sellers see that buying is starting to run out, they will lower price. Just like Walmart lowers price, right? When Target puts something on sale, yeah, exactly. You're gouging eyes, exactly. See? How does that help us? So we'll say, like Cisco's long, right? So he knows where the sellers are going to be, and if they start selling aggressively, he'll get out of his position. That's why you mark the candle highs on the way down, and that's where the sellers will be on the way up, right? Sellers initiate and compete at the top of these candles, right? Price goes down because one seller undercuts the other, and that's why you get that trend line down. When you get a trend line up, it means that sellers are raising price because they see buyers, right? That's why these guys call it a two-way auction. But when you say two-way auction, it confuses the hell out of a lot of people. Oh, well, it's been an interesting week, right? Let's see what happens in the overnight. We're going to try it. If there's enough short covering, they'll come in and bid here, right? When a market goes up and then comes down, the first people to buy are short sellers. And we call them smart money shorts. They have to buy size, right? Do they still have the red leather sofas at the London Metals Exchange? I've never seen a trading floor where guys are sitting on sofas and drinking. That's a trip. Oh, it's not that fancy, Cisco. It's just a bunch of drunks stumbling over orders. Too funny. You guys have any questions? Thanks so much for being with us this week. Our next session is around 2:15 UK time, which is 9:15 New York time, Eastern time. And if you're not around, have a great weekend. Enjoy the sun. Otherwise, we will see you all in the next session when the regular trading hours opens. Thanks for joining us. Thanks for the folks on YouTube. Come give us a shot at Trading Syndicate. We look forward to having you. And of course, if you have any issues or questions, reach out to me. I am around. Thanks, everyone. I'll be out for about a couple of hours and then I'll be back. Thanks, everyone. Have a great trading day. Bye for now. Oh, yeah. And I'm redoing the price action lab at 11 Eastern, okay? Because the recording didn't work yesterday, so I'm redoing the trading lab we did in the room, okay? I'll put the announcement out now. Thanks, everyone.